and I'll give it to you as I see it. I do see that the number is out, and it is 678,000. 678,000. I do think I won. That is much better than expected. And if we look at the 2-month revision, it's a positive 92,000. On the unemployment rate, 3.8%. 3.8%. Average hourly earnings month over month. Boy, is this a mistake? Zero. I see zero month-over-month change. Not sure if that's accurate or not. On the year-over-year on the earnings, 5.1%. That's a huge miss, obviously. The underemployment rate, or U6, is 7.2. If you recall, our low watermark there, which is the good side, is 7.1 on our last look. Don't see a revision yet. I don't see private payrolls or manufacturing yet or average hourly work week. But considering the 678,000 in the revisions, here we go. 654,000 on private payrolls. That is well above the 400,000 expected. 36,000 on manufacturing payrolls. And the labor force participation rate at 62.3 is a post-COVID high watermark. And just for context, pre-COVID, it was 63.3. There are some subtle revisions, but I won't go for that for the panel other than the big important ones, and that is year-over-year average hourly earnings went from 5.7 to 5.5. The average work week, 34.7, is the number. That's exactly as expected. All right, panel, much better on jobs. Interest rates haven't really moved all that much. Neither have pre-opening equities. I think the world is digesting this. Back to the gang.
Rick, first of all, congratulations. I think you were the closest to that number. But let's get right to the rest of our jobs panel for more on this instant reaction. Steve, first of all, we just said that this number was not as important as it was 48 hours ago, now that we know what the Fed's doing. But these numbers are incredibly positive across the board, strong numbers, and that wage inflation not showing up as people had worried. What does this mean? What is this telling you? I know it's just 1 month, but what would you take out of it?
Yeah. I'm not going to get too concerned about that, in part because there's a whole mix issue, like who's in the workforce, who's out. What you might have had is a huge return to the workforce of lower paid workers, and I'm guessing that that's probably what drove it down. What I'm really interested here, it's nice. It's the breadth of the job gains here. I'm looking for one particular number here. Education, health, plus 112. There it is. Leisure and hospitality, up 179K. So that's a good number. You really had reopening of some of these pandemically closed businesses, if you call it that. I saw factory jobs up were 36, and I saw construction up 60,000. I don't know if Rick gave you the work week up 34.7. Look, this is the nut of Powell's argument about why he can both go slow and not worry about the economy. Forget about the war for 1 second. I'll bring that in just 2 seconds. But that he has a lot to play with here. He's got a really, really strong job market. He's got the Santelli predicted 3.8% unemployment rate. He has job openings at 11 million, strong job growth. Goolsby's probably right that it may get worse from here. But if you think about the idea that, and I've said this before and I'll shut up after this, got 11 million job openings, 6 million is normal. Powell can hike rates and get rid of job openings and not actual jobs.